So you need to stay engaged. This is a lab. This is a replication of the real world environment. This is what we do in the real world.
Yeah, I saw a preview of it in the first class, and ooh, yeah, pay attention. Chat later, because this moves fast. So yeah, you've seen me before. I've talked about some of the resources before. I'm going to show you some of the resources that you're going to be bouncing back and forth between to get all these numbers. There's not one place that has everything. There's a few places that have most of everything, and you're going to have to be going back and forth and back and forth. I've always told you about Mergent. That's going to be the first one. So follow along on the library homepage and get these up, because you're going to start looking at numbers and answering these questions like now. So on the library homepage, there's a link to the research guides, and that's where you'll want to go now. The subject guides are dying. The research guides are where all the information is at. Go down to the business page and go to business administration. You can ignore most of this stuff for now. We're really going to be looking at the company information and the investment and stock market information. Those are the databases you want to be in.
Oh, I forgot, Sarah, we're going to need, we'll be able to pull the company financial ratios. We'll calculate the peer groups. But if you have any places where we can go for the industry ratios,
yes,
that would be awesome too.
Okay, so then we'll go back up to the industry information as well. Mergent might actually have some of that, since this is a big industry. So company information, the big one is Mergent. Mergent Online is going to be the one you're using the most often. It's probably got the most data in one place. You're going to want to know the tickers for your companies, so you can Google that.
So what company are we doing?
Goldman Sachs.
What's the ticker?
GS.
Perfect.
GS. Wait for it to populate. There it is, Goldman Sachs. Bank of America's BAC. Citigroup is actually just C. So you want to click on that one. And here's the basic information, some fun stuff. You can see how much the CEO makes, a whole lot. And then the most important thing over here are the company financials. And there they are.
And I would pull up in different windows. I would go to Mergent and do Goldman, JP Morgan, Bank of America, Wells Fargo, and Citigroup, because that's the peer group we're going to use. But we'll focus on Goldman Sachs. But if you pull up the information in Mergent, for those five, you'll be able to collect the information very quickly. Okay? And you guys are basically the data analysts that are basically pulling together the information as quick as possible so we can run through the valuation, which will be the basis for your presentation.
Over here is, up here, these little pull-down menus are where you can switch between the balance sheet, the income statement, and all those other things. What I do personally is go to all sections just right off the bat and get all the data on one page. And then hit refresh, and then you'll get this long list of data. The other thing you can do here is change from 5 quarters to 15 years, all years available, and you'll get historical amounts of data. So this one actually goes back to 19-something,
Hey, Sarah,
1987.
Sarah, I need to, maybe you guys can find it for me. I need the value of the long-term debt and the value of the owner's equity. Because I want to calculate the capital structure here and find out how they're financing their long-term assets, and then use those weights to calculate the weighted average cost of capital.
Okay, so what I usually do is Control F to try to find something on the screen, and I'll just type in long-term debt. Here we go. And see all of these things that's mentioned long-term. They may not be called exactly value LT debt. They'll be called something else. You'll have to figure out which of these things is what I'm looking for. So we've got current portion of unsecured debt. That's not probably it. Unsecured short-term borrowings, including the current portion. I think that was the right one, right?
How big is this bank? Well, that's relative.
It's $1,000,000.
Yeah, it's almost $1 trillion. So that gives you kind of an idea of what the capital structure would be around. So are they going to use more debt than equity in their financing of their assets, or are they going to use more equity than debt? Do they use more debt than equity, or equity than debt? Or do they not just not care? How they basically find what their capital structure is. Yeah, based on the theory, what would you use? More debt or more equity? What? Oh, okay, so which one's more expensive? The equity or the debt? Which one costs more? Equity costs more, so are you gonna use more equity or are you gonna use more debt? If the cost of the equity is more. This is the oral exam right here, okay, that pulls it all together. What?
Use more debt.
You're gonna use more debt because you get the tax shield, exactly. So let's go up and see if we can find long-term debt on mergers. I'm gonna be speaking really fast. And going really fast because we're over two-thirds into the class and you've learned all this stuff, so you know that.
So it's unsecured long-term borrowings, right? Is that which one it was?
Yes, it's unsecured.
Yeah.
I mean, isn't our bonds secured or unsecured? Are they secured or unsecured? Are they collateralized by an asset or not? Or collateralized by the long-term capability of the firm to generate income? Are they collateralized? Are they secured by an asset? Or are they unsecured? Based on the earnings capability of the firm. No, they would be called asset-backed securities if they were asset-backed or secured. So does Goldman Sachs use more unsecured debt or secured debt? Unsecured debt. So what is the amount of unsecured debt?
217,687.
And this is it long-term or short-term?
That is long-term.
Okay, what is it?
Unsecured long-term
200
borrowings.
something? Bill?
217,687. So do y'all see where I found
So
that?
it's 218 billion, right?
Is this in millions?
How big is the bank? It's almost a trillion. So would the long-term debt be in millions or billions?
Millions.
Millions or billions? Millions or billions? Billions. Billions. Got it. So what's the value? Does it have it up there, the value of the owner's equity?
Got equity methods, total shareholders' equity.
I'll take it. How much is it? Basically 82 billion. Can somebody add this up for me, please? You're gonna need your calculator. Where's this exercise? So it's 218 plus 82. What is it? 300 billion, got it. And if you divide 218 divided by 300, what's the weight of the debt that is used to finance the long-term assets of the firm? So what's 218 divided by 300? Yeah, so like 70%. So that makes the equity portion what? 1 minus the weight of the debt is the weight of the equity. 30%. Got it. Excellent. Okay, go ahead, sir.
So that's usually what I do. I just go through, I put all the data on one screen, so I can see it all, and I use the Control F to find the kind of things that I need. So you kind of know what portions of things you need to look through those and see if you can find the number. If it hasn't been reported, it'll be a dash. Sometimes they call different things for different companies in different places. So this one in particular, we were earlier looking for the PE ratio, and this one doesn't have one. So in that case, we have to go back and find one of the other resources. So we were in Mergent. You can also look the same thing in D&B Hoovers. That has actually had some other pieces of data as well. So let me open up that guy here. Let's look up the same company. We can do it by ticker. This one's a little bit easier to search by name, but oops.
So what are we looking for? PEs?
Goldman.
We looking up PEs?
We can do all kinds of stuff.
Can somebody or a group of people do me a favor and look up the total value of the assets for the peer group? JP Morgan, Bank of America, Wells Fargo, and Citigroup, and Goldman Sachs. And then we're going to need the price to earnings multiples for 2017 and 2018. If you guys engage in this process, we're going to whip through this really quickly, and we might get through the valuation work today. If not, then it's going to take a longer time period. So those are the two things that I need now.
So this one, again, some companies will have more information than others, so that's why we have to keep all the different tabs open and look at all the different resources. So Goldman Sachs didn't have a lot in D&B Hoovers, so I switched over to Citigroup. What kind of data can we get from Citigroup? And we can. We've got all this. We've got financial health. We've got the annual ratios. We've got ratio comparisons, which are always nice to see. And there we go. We've got some PE ratios. We've got price revenue, We've got all kinds of stuff here as well. The numbers should be the same between this resource and Mergent. It just sometimes this source will have more of the numbers than Mergent will have. So there's no one-stop shopping. As close as we can get is, you know, these three sources that we have that I'll show you. So if you don't find it in one place, look in the other. You're going to need to give yourself a lot of time to do this, and you don't have a lot of time in this particular class because you're just like, look, 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 look. The other resource you need, so that was Mergent, D&B Hoovers are the two things you should have tabs open of right now. The other one you can look up is the investment and stock market information. And in this case, we're going to skip Standard & Poor's right now. I was not able to get through to them in the 20 minutes I had between classes. This isn't working right now. Again, they're about to get canceled. Morningstar and Value Line are the ones you'll really want to use. So let's go into Morningstar Research, have that open in a tab. Again, look for your ticker or your name, GS, Goldman Sachs Group, Inc. And here's a lot of information there as well.
Oh, wait, do you have the assets? Oh wait, there's a forward P right there.
Right here. Yeah, there's one. So they'll be in different places. Got to look between all these different sources. So is that the one you needed?
Yeah, I'm going to use that as just a plug.
As an estimate?
And then I need 2017 too. D&B 17.46. I don't know. I've never used D&B. I'm more comfortable with Value Line and Mergent.
Those are the big ones.
Yeah.
So here's the current valuation. PE for Goldman Sachs right now
Is what?
14.6.
Okay, I'll take it. Do we have 2017?
We do, right down here, 13.3.
13.3. Can you give me the 2018 and 2017 P multiple for JP?
We can do that.
We're going to be going back and forth and stuff, so I would open up multiple windows, you know, for the different companies, so you can get access to the data really quickly.
So we just switched over really quickly to JP Morgan Chase.
Okay, and where was the
Key ratios, there we go. Or is it, oh, valuation.
valuation?
Here we go. Here's the PE, price for earnings. For 2017, it's 15.4.
15. And did they give us a forward PE?
TTM,
Yeah.
13.5.
13.5. Got it. So can you go to Bank of America?
Okay.
Try to follow along.
Bank of America. Go to valuation. There we go. Price per earnings.
16.9.
16.9 for last year.
Got it.
17.
And then what was the forward?
13.2.
13.2. Can we go to Wells Fargo?
WFC.
Go to valuation. Go down. What do we have for 2017? 15.7.
7.
What do we get for 2018?
12.4.
And then what do we got for Citigroup? In the last class, Citigroup's was 0.
Yep.
Yeah, I got 14.3, and I was going to plug it at 10. I was going to be nice and give it a 10 times PE multiple. Okay.
Okay, so that's one. Another place you can go for different, if you don't have a data point there, you can also try and see if Value Line Research Center has a plug for the data. Let's look up, since we have a 0 for Citi, we can check Citi and Value Line.
It's probably not up there because their EPS is probably 0, and you can't divide a price by a 0 because it blows up the equation. So I just plugged the 10 in there for now. But what I do need, Sarah, to do the peer group financial ratios, I need ROE and ROA for the top 5 banks.
So, we've gone through Mergent and D&B, so those are 2 places you can get some of the data. Gone through Morningstar and Value Line, those are 2 of the places that you can get the data. When in doubt, I always go back to Mergent, because that's the one I'm most familiar with, I'm the most comfortable with, that seems to have the most amount of things. So we're back in Citigroup, because it's still open in a tab. We have the company financials. As it when it defaults and you click on the company financials, you get the whole big long list of things. That's the whole big data set. But there's also these little guys under here. So you have little tabs here, and there is one for ratios. And ROE and ROA are, as you know, ratios. So here they are. You've got them.
And this is just a sampling of the financial ratios that you're going to be assembling to calculate the peer group ratios. And then Sarah's going to show us where to get the industry ratios so you can do the overall financial condition and position of the firm using the financial ratio analysis.
So there you go. ROA for Citigroup.
Okay, so Citigroup, we got ROA is what?
Negative 37, or negative 0.37.
And do we have ROE?
Negative 3.19.
Negative 3.19. And do we have the ROE, ROA for JP Morgan?
JPM. Change company. Changes over right to that screen. So here, I'll let you all call it out.
Why don't you yell it out to me?
ROA is 0.97.
0.97. And what's ROE?
9.59.
9.59. Great. So can you give me Bank of America, BAC? The
BAC.
faster you get the data, the more points you get.
There you go.
ROA is 0.82.
0.82. And what'd you get for ROE?
6.83.
6.83. Got it. And then what do you got for Wells Fargo? Again, this is a lab, so you should be on the computer. You can be writing stuff down, but you need to be engaged in the computer. What is it? Wells Fargo's ROA?
I had not lost it.
1.8.
1.8. And then what is Wells Fargo's ROE?
13.36.
13.36. Got it. And then I need Goldman Sachs, ROE, and ROA.
Citigroup?
I need Goldman Sachs.
0.48.
Is that ROA?
Yes.
0.48. And then what's the ROE?
5.07.
5.07. Awesome. Okay. Let's keep going, Sarah. You're doing great.
What about these guys back here? I can't remember what those were.
Okay, what we need to do we need, are we going to use earnings per share to calculate for the valuations? Are we going to use earnings per share? Yeah. When would I use free cash flow per share? When would I use EBIT or EBITDA per share? Does earnings per share include charge-offs? You charge off, you take it out of earnings, charges, you write off impaired assets and contingent liabilities such as lawsuits and stuff, you take it out of earnings. Yeah. So you're going to use EBITDA per share if you're using companies, and you're going to use EBITDA per share if you're in a recession and you're trying to forecast where the stock price is going to go 3 to 5 years out. Are we in a recession? Yes. Okay. Has there been a recession within the last 9 years? 8 years? So we're going to use earnings per share, correct? I need at least, over a little over 10 years at least of earnings per share data going back past at least 2 recessions. That includes recessions and growth peak phases. Are we in a recession, decline, growth peak phase of the business cycle? Where are we?
Peak.
We're in, growth peak. Okay, perfect.
So you're going to have to follow along on your screens because obviously we're losing this screen up here. I mean, you can kind of see where I'm going. We're back on that company financials page with that long list of stuff. Like, how do you go about find it? Again, I use Control F, look for earnings. I just go with all the earnings until I find something that looks like the one I want. Net earnings, that's not it.
And I'm going to need your help on this because the last class.
We got off one and
Yeah, I made a
it went
mistake.
bad. It went bad.
And,
So
kinda
here we
threw it
go.
off, so.
Net earnings per share basic. There we go. You've got it.
So can you guys read that off to me, starting in 2001 going forward? Can you read it off for me so we can plug it in? And then could you do me a favor and calculate the percentage change between the years so we can track and see what the earnings growth rates have been over the cycles? Okay. So can you give me maybe 2001 earnings per share and then the percentage change between 2000 and 2001? So let's put the numbers in first. So start reading off the numbers for me.
So let me highlight.
Jake, you know where we are?
Yeah, I'm trying to get onto,
Virgin?
and it's saying that I need a password for the user.
That's wrong merchant. Let's go back.
Okay, everybody on Mergent, everybody on call along, getting kind of comfortable moving back and forth through the platform across the different data
This
sources.
is wrong, it's not for me.
I'm gonna need to go back at least to 2001 for earnings per share.
So if you can see on the screen, I went up to the top.
So we want to use earnings per share basic. We
And
don't
you
want to use
can-
diluted.
These drop-down menus, choose all sections, all years available, and that'll get you the most amount for your spreadsheet. So this is under company financials, or company information on the library subject page, and it's Mergent Online. That's the big one. Look up by your ticker. So I looked up, earnings, and then just went down until I found.
SJPM or
This-
Fargo?
No, we're just gonna use Goldman Sachs now.
Or one side.
We're now focused on the company. We're doing kind of comparative analysis over there with the multiples and the financial ratios.
So this is the column that we want.
And we want to start with 2001, and then I want to go all the way through and get an estimated 2018 or 19. And then we'll start playing with it, because I'm not a big fan of using estimates. I like to come up with my own EPSs, particularly for 2018 through 2024, because we're going to need that for the DCF model.
Okay, so that thing I have highlighted, the screen is looking weird. This doesn't match that. This is actually the column that not column, the row that we're on, is the net earnings per share. The one I have highlighted is 2001. So that's your first number.
Okay, so what is it? Which 2001 earnings per share basic?
4.53.
What is it?
4.53.
Is that correct, Sarah?
Mm-hmm.
Okay. Okay. Is that correct, everybody?
Yes.
Okay, great. Now just read them off to me. 4.27, 6.15, and if he yells out something wrong, will you catch him?
I'll try.
Okay.
9.3.
9.3,
11.73.
11.73,
20.93.
20.93,
26.34.
26.34, and you guys should be coming up behind me and doing percentage change calculations. So that when we're done with this, we can come back and fill those in. So what was 2008?
4.67.
167, what about 2009?
Negative 2.15.
2.15, 2010,
23.74.
23.74, 2011,
14.15.
14.15, 2012,
4.71.
0.71, 2013,
14.63.
14.63, 2014,
16.34.
16.34, 2015,
17.55.
17.55, 2016,
12.35.
12.35, 2017,
16.53.
1653, and do we have any place on the internet or any of the sources that we talked about that will give us the 2018 or 19 estimate? Is it still off?
We're off by 1 year. This
So-
this
so-
should be, it should be shifted down. This is 17. Oh, wait.
So I gotta move everything back?
Yeah.
You know, all this should be shifted back?
So 16.53 is actually, which is that first column? 16.
Okay, so do I go back and recalculate everything, or do we just go back? Can you guys double check these numbers?
Yeah, it's easier to see on your screen than mine,
Oh, yeah.
because it's being all weird, and
You need to double check these numbers.
don't take my numbers up here worth it, because I
This is
can't
where we made
see.
the mistake earlier this morning. Are these looking right?
Column headers don't match on the
Can you
big
get on the
screen.
computers and check it for me, please? Pretty please. Do those look right?
I mean, she's right when she says that the 1653 should be on 2016.
They should all be shifted down.
So everything?
Mhm.
I believe
Looks like
so.
it. Yeah.
No? No? Yes? I have 32 people working on this project right now. I need some feedback, please. We can't go forward unless I get some consensus
What
on
was
you
the
guys.
first number?
Say that again. The 2001 was 4.53.
Somewhere it goes through. I can't tell.
Is that correct?
That's correct.
Okay, so let's just go through it. So 2002,
4.27,
got it. 2003,
6.15,
got it. 2004,
9.3,
got it. 2005,
1173,
got it. 2006,
2093,
got it. 2007,
2634,
2008,
467,
2009,
negative 215,
2010,
2374,
2011,
1415,
2012,
471,
2013,
1463,
2014,
1634,
2015,
1755,
2016,
1235,
2017.
1653.
Got it, okay. And then on the first page on merchant, don't they give you a forward-looking EPS or current estimated EPS? Yes, no?
It's,
Don't they give you an estimated EPS on the front page? A basic and a diluted. I don't want the diluted, I want the basic. Can you Google that too? Can you Google Goldman Sachs 2018, 2019 EPS estimates? Could you do that?
It's
Yeah, I think
14,
NASDAQ also gives
it's
you.
14.21.
For 2018?
Yes.
14.21, do they give you a 2019?
No.
Has anybody Googled and see if they can come up with maybe a confirmation of the, or some other estimates of 2018 and 19 for EPS? Did you guys calculate the percentage changes? Can you start, while everybody's working on verifying the 2018-19 numbers, can somebody give you the percentage changes? Yes, sir.
Working on it.
So for 2001, 44%.
44?
Yeah.
Okay.
Second year.
Is everybody checking the numbers so that they're correcting it? So they're not using erroneous
Oh,
numbers?
no, my God, that's right.
Okay, so this is the problem with by using one person. Okay, I need everybody to check these numbers and calculate the percentage changes and tell us that they're either correct or wrong.
Minus 5.74.
On the 2001,
Yes,
negative what?
5.74%.
Is that correct? Okay, give me 2002. Can you calculate the percentage changes for me, please?
6.09?
How's that work when it's a negative?
Sorry.
Sorry, 5.74 should be for 2002, 2001.
Negative 5.74
2001 we need year 2000.
is what?
We need year 2000.
Yeah, so give it to me later. So what's 2003?
44%.
44, got it. What's 2004?
51.2.
Is everybody checking these numbers? 2005?
26.1.
Is everybody checking these numbers? I'm only hearing one person. Is
It's
that really correct?
correct.
Thank you. 2006?
78.4.
78.4. What about 2007?
25.8.
25.8. 2008
Negative 82.
and 2009? That's brutal.
Negative 146%.
146, that's a lot, isn't it? What about 2010? Like 1,000, something like that.
1,200%.
And then what's 2011?
Negative 40%.
2012?
Negative 67%.
7, do you think the stockholders are happy? 2013,
211%.
2014, 2015,
7.4%.
thank you. 2016,
Negative
30.
29.6%.
I got,
And
yeah,
then-
29.6.
what is it?
29.6.
Thank you. And then 2017,
33.9%.
and then what about 2018?
Negative 44.8%.
That's just an estimate, I'm not a big fan of estimates. Okay. Sarah,
This thing would be the industry,
I need total assets for Citigroup.
oh, total assets first.
And then, do we have any, can you find me some yield maturities on Goldman Sachs debt maturing between 7 and 10 years? Maybe you can Google it, or go to Merchant, or find maybe an average yield maturity on their long-term debt, you know, and, shoot, you don't have S&P would have it.
I'll go call them again.
If not, we can interpolate the cost of the debt, which is what we did in the last class, because we couldn't find actual issues of medium to long-term debt and look at their yield and maturities.
Are you going with the commercial banking or the loan administration, which are their industries?
We'll do commercial banking.
Okay. So for the last bit of data that you'll need, so those are all company. That's company and investment, specifically tied to that ticker. So you want to make sure you have all of your tickers correct. You also want to look at, compare it to the industry, because obviously you want to see how are they comparing to their peers. You can do it individually, but they look at a larger data set. So between company information and investment is industry information. And there, my first go-to always is IBIS World. They have some really good analysis, but they also have a data tab. So what I usually do, unless I know the specific industry, I can type in one of my big companies. So I typed in Citigroup, and they suggested these different resources. So again, this is under industry information on the library's page. So we're gonna go with the commercial banking one, because we suggested that's the industry we really wanna look at. So the first few tabs are all about the analysis. Someone has actually written up the analysis. But over on the back, there is a key statistics.
This is a good place to get, to pull your SWOT analysis from too.
Yeah, because this is what IBIS World does. This is why we pay them the big bucks. And so here are some of the big things. So the industry data, we've got revenue for the industry, how many establishments, how many enterprises, what's the employment, what are the wages.
We need ROE, ROA, debt to equity, some of the financials.
So further down are the annual changes. Then there are also some key ratios as well. Industry financial ratios, oh, those look familiar. Here we go.
That's a new one.
So the liquidity, assets, and liabilities as well. So we're looking for, what are we looking for in this one?
You know, an average ROE or ROA. If you can't find the industry ratios, we can plug them into the PowerPoint presentations. Nobody's going to know. It's usually the peer group and the individual firm ratios are better than the industry.
They'll be in here somewhere. They might be called something different. So you want to look at how they define them. I can check, and also D&B Cougars will probably also have it as well. So you can look through those and see what's available there. So these are the
And doesn't Merchant give us some industry ratios?
Merchant does. So these are the big ones. These are the RMA stats. Those are like seem to be go-to, at least with our graduate students. You can also look here.
Let's do Merchant, because I remember they had better industry ratios.
I remember how to get to it from here. Give me a second. I have to remember.
Yeah.
I have to remember where it is. So I might have to just click on the industry.
We can always come back to that piece on Thursday too.
It's in here. I just have to remember where. Is it the analysis? You might have to go back to the main screen. So investment banking. We can just let's go back to the search page. There's the industry analysis tab.
GS.
company, we want North America, I'm assuming.
Yeah.
Search. And there we go. So you'll see the date, the last one they did was April of this year. We can view it, and there we go. So there's the current earnings, you'll see that your company's mentioned here, and here's some of the data. Key references, profile.
So it's a report date,
Yeah.
but they don't have like a table with the financial ratios.
They do sometimes, depending on where it is here.
Yeah, I just had a hard time finding the industry ratios.
They're
Maybe
all
you-
over the place.
Maybe you'll find them, I just couldn't, I had such a hard time finding them.
Also, so industry information, we can go to the ratios page. Key business ratios is a good one. So they're all over the place. Again, there's no one go-to.
So where did you go, that's done in Bradstreet,
Yeah,
and is that banking?
we can't find, do you happen to know the NAICS code off the top of your head?
I don't.
We can find that. So investment banking, there's the NAICS. Go back. Search by the NAICS. That's not right.
What is it, 523110?
Yeah. That sound right?
That should work well. It says agriculture.
It's going by, oh, there we go. It's going by, what's the SIC? Who uses the SIC? Who uses the SIC?
I thought they got rid of it.
I know, that's, no one uses the SIC. Search. Banking, line of business. Mortgage. Well, that's not quite the right one. I'll send it to you.
Okay, cool.
But there is those guys for the.
That's what we need for banking. Can't you just drop down the line of business there and just pick it?
Should. There's investment advice, security brokers, loan brokers, mortgage brokers.
Financial services.
This is also right here. Google, financial,
It should be commercial banking.
oh, commercial banking. Banking, SIC. 602? And it may not have it because, of course, it never has the line aloft. Credit. Yeah, they don't have that specifically.
Okay.
There's a bunch of places to find it. So key business ratios, I love because it's like, it's the key business ratios, but it's never the ratios I want.
And
DMB,
you guys don't have S&P, do you, industry?
we do, except
It's not working.
it's not
Okay.
working, which is
And does the
crazy.
Morningstar give us
It could,
financial ratios for
not
the
as
industry?
much, let's see. Let's see if we can search the, industry by,
And then we're gonna have to jam here.
yeah, so. Let's see if we can get that. Investment banking and security detailing. There's some more RMAs, and it was basically the one that we just saw earlier. So there's some as well. So there is that tab, and you're gonna be responsible for figuring this crazy mess of stuff out. The industry information,
Welcome to
these are the
research.
sources we have. The ratios, these are the sources that have the ratios. If you still can't find the ratios you want, we still get the old-fashioned print guides. They're collecting dust down on the first floor, so use those as well. This is actually a really good source that does not get used enough. So search those, try to find your commercial banking, try to find the SIC code, try to find the NAICS code. That'll get you where you need to be. Sometimes they have them, sometimes they don't. It's a fishing expedition, and that's why finance does so much research and they work so long on these projects and have so many people working on these projects.
Cool.
So does that help?
Yeah, I think we got everything.
You got all the sources you need. Switch back and forth between them. You too will have 500 tabs open on your
Don't forget to take your
browser.
chocolate too.
Oh yeah, I'm taking.
You worked for it.
Going to a meeting, I'm taking this. If you run into a problem, need a piece of data, can't remember what source it was, or one of the sources isn't working, like that merchant, which is not the right merchant, but I gotta call them too. If it's not working, call us, let us know it's not working, because we can't keep up with all the database downtime.
Okay.
Thank you.
All right, so let's go over there. once you get the total assets, can you add them up and then calculate the market share for them too? Over there? So step one, you need to come up with the discount rate that you're gonna use, the sensitivities of the discount rate, okay? And first thing we're gonna do is, what's been the expected return on the S&P 500 over the last 10 to 20 years, on average? Yeah. Anybody else? I'd like to use a different rate. Anybody, you can Google it, you can find all this stuff. You don't have to wait for your professors or anybody to basically, when they ask you a question, anybody asks you a question now, you guys got it at your fingertips. Okay. What has it been? Okay, has it been 20%? Has the S&P 500 returned 20% per year for the last 10 to 20 years? If it has, your parents are rich and you wouldn't be here, okay? So has the S&P 500 returned 20% per year in the last 15, 20 years? No, okay, great. So you know it's not 15, 20%. What's the 10-year treasury yield right now? What's the 10-year treasury yield, or the 30? Right now, do you have a computer?
This does not let me log in.
Okay. What's the 10-year treasury yielding right now, and the 30? Do you think the S&P 500 has returned more or less than the treasury yield? More, okay. So where's the 10 and the 30-year yielding right now?
10 is at 3.14.
Okay, 3.14. Where's the 30? You can look it up. Google it. You guys don't have access. Some of you aren't even online. You don't have access?
It's 3.37.
Is that letting you log in?
3.37.
What is it?
3.37.
37. Okay, so this is kind of a nightmare when you guys can't log in. So do you have a laptop or something that you can?
No, I'm just trying to.
Okay.
Oh, wait.
Okay. So do you think that the rate of return on average over the last 15, 20 years has been 3 to 5% on the S&P 500? 3 to 5%, which is basically the average of the 10-year treasury yield over the last 15 to 20 years. So you're telling me that the risk in the stock market is the same as the risk-free rate?
Let's look at the S&P 500 chart, and what's been back on here, it's about 34.
You have to calculate an average annual compound growth rate. You can't just do the percentage change divided by 20. The average rate of return on the S&P 500 over the last 15 to 20 years, please burn it in your brain and write it in your notes, because it was on the first exam, is 8 to 10%. It's been 8 to 10%. Got it. So how do I calculate that's the risk-free rate. So how do I calculate the cost of the equity or the expected return on the equity? What equation or what model would I use? This is an oral exam here to kind of test your comprehension of the key concepts so far through the semester. So what model would I use to calculate the expected return on the cost of the equity? Cap down. And what is the capital asset pricing model? Can you give me the equation? You gotta give it to me really quick. We can't have any wasted time here. The time was a luxury. We have no time. So what is it? The risk-free rate plus the beta minus the what? You should be looking this up. What is it?
The
Return on the market minus the risk-free rate. Okay, you guys need to tattoo that on your ankle and never forget it. Okay? Because they're going to expect you to know it. What is the beta on Goldman Sachs? What's the beta for Goldman Sachs? What's the beta for Goldman Sachs? Now, this is how it's going to be in the real world these days. They're going to ask you questions, and you're going to go straight to the computer and start pulling the data. Okay? Because you have internets, you have extranets, you have private databases, you have dashboards, you have all that information. There's no excuse not to get the information anymore. So what we can, what is it?
1.08.
Thank you. Where'd you get the source?
So down to 5.
Okay, cool. So what's the risk-free rate? What's the risk-free rate we're gonna use? What are we gonna use with risk-free rate? What are we gonna use? What risk-free rate did we just talk about? The what? The 10-year, okay, so what's the yield to maturity on the 10-year treasury? Right now. 3.14, do you think that interest rates are gonna go up or down over the next year? Do you think they're gonna go up or down?
Next year.
Over the next year, do you think interest rates are gonna go up or go down? Probably go up. So what do you wanna use? 3.2, 3.25? Okay, let's do that. We don't have time to go to the econ department to get these forward curve projections. We basically need to run through the methodology, and then you can go learn how to do all the detailed stuff after this. And what was the beta? 1.08. And what was the expected return on the market? What do you want to use? It ranged between 8 and 10%. 9%. What was the risk-free rate? 3.25. Is this the way it's going to be? Where Giacchino's going to basically be giving me all the answers all day today? I need more participation in this process. So what's 9 minus 3.25 to get the market risk premium?
5.75.
What is it?
5.75.
Got it. Times the beta, 1.08, to give us the market price of risk. So what's 5.75 times 1.08? 6.21, and what's 6.21 plus the risk-free rate, which is going to give us the expected return and the cost on the equity.
9.46.
9.46, got it, okay, remember that. All right, great. So you know what the cost of the equity is, let's just say it's 9.5. And, oh, did we have an estimate of the cost of the debt? Did you guys find any yield maturity on Goldman Sachs bonds that were maturing between 7 and 10 years? The answer is either yes or no. I can't wait. Either you've done the research and you're finding it, or the answer is no, and I can move on. This is the way us managers are. If we don't get the answer, we get to overcome the bottlenecks. The quicker you can solve the problem and overcome the bottlenecks, the faster you get to the solution. Okay, do we have a cost of debt for Goldman Sachs? Yes or no? It's either yes or no. No, okay. Can we estimate the cost of the debt? Yeah. Can we estimate the risk-free rate? Yeah, so what's the risk-free rate? 3.25. Do you think Goldman Sachs can borrow at the US Treasury yield at the risk-free rate? Goldman Sachs, a company that's over-leveraged, we figured out that they had 70% leverage, which is pretty high leverage. You're saying because that firm can borrow, and it has a lot of leverage, and it's been impaired, and it's late in the cycle, that they can borrow at the US Treasury risk-free rate. Is Goldman Sachs a Federal Reserve Bank that can print money? No. So can they borrow at the 10-year Treasury yield? No. So what has been the average yield on 10-year treasuries of the last 10, 20 years? What do you think? Were interest rates higher or lower in 2006 and 7 than they are now? Higher or lower? They were lower in 2006 and 7 at the peak of the last cycle in the real estate bubble. Probably higher, probably what? We're at 3 now, they were probably at 5. Probably at 5. Okay. And then where were they in the 1980s? Where were 10-year treasury yields? Yeah, exactly. Okay. So 5 in the last cycle. So can Goldman Sachs borrow at the risk-free rate or at something above the risk-free rate? What? Above. Right? So the long-term average on the 10-year treasury yield is 5%. The current yield is 3%. The long-term, over the long run, it was around 10%. So what do you think the cost of debt is for Goldman Sachs? You know it's not 3. Could be around 5. Is it higher than 5? Or lower than 5? Would it be higher or lower? Would it be higher or lower than the risk-free rate? The historical, it'd probably be higher. So what do you think? It's not 10, probably a little bit higher than 5, probably around 7. If you know what it isn't, then you know what it is. It's called deductive reasoning. If you can do the research and find the data and confirm it, that's inductive reasoning. If you don't have data to be able to do inductive reasoning, you use deductive reasoning. And you figure out what it can't be, and you narrow in, and then you take the average. So we're going to use 7%. So we got the cost of the debt, the equity, and we got the cost of the debt. Excellent. Can I calculate the weighted average cost of capital? Now that I have the cost of the debt, the equity, and the weights? Yep. So what was the cost of the equity? What is it, 9.5? Got it. And what was the cost of the debt? 7. So what's 7 times 0.7? 0.9. And what is 9.5 times 0.3? Is that correct?
It's 4.9.
Or did you just like,
It's like, that's a 5.
did you say 4.9?
4.9.
Okay, thank you. I was going, wow, that was impressive. 9.5 times 0.3. What is it?
2.85.
8.5. And what's 2.85 plus 4.9 to give us the weighted average cost? 7.75, got it, okay. So basically, the weighted average cost of capital is, looks like 8%, right? And what was our cost of equity? Almost 10. What was our plug number? 9. There's your discount rates. That's how you come up with the discount rates. Calculate the equity, you figure out the return on the market, you approximate the cost of the debt, you figure out the capital structure, the weights. Do you want to use, do you want to discount the, do you want to do 1 minus the tax rate? Because you can deduct the interest on the mortgage, or do you want to be conservative in your discount rate scenarios? Yeah, you want to be conservative. Okay, so now we got the discount rates. Awesome. Okay, so let's go over here. Now we got to figure out the earnings per share. All right, so let's go through this. So we have basically the earnings per share and the earnings per share growth rates over the cycle. Okay, I could spend a whole semester in financial statement analysis to be able to come up with a pro forma to basically project out what the earnings per share will be over the holding period. We don't have time to do that. So I'm basically going to use financial economic analysis to basically look at the growth rates and earnings per share going back 2 cycles. And are we in a recession? No, so I won't be using recession scenarios. Are we in the decline phase of the business cycle? No, so I won't be using the decline phase. Are we in the growth peak phase?
Yes.
Yeah.
Yeah, probably in the mature phase. We're probably like right here, right? So that's what we want to do, is we want to go back in time and look at that phase of the business cycle and look at the earnings growth rates during those time periods, okay? So when I came up with this down in here, we were in a recession in 2001, 2, and 3. Do you think in 2019 or even in 2018, because I'm not really too happy with this number right here, because I really don't think that the earnings per share for Goldman Sachs is going to be negative 44% in 2018 with rising interest rates and higher interest rate margins. However, Lloyd Blankfield was basically caught negotiating behind the scenes with the Singaporean pension fund, which is a multi-billion-dollar fund that basically the corrupt politicians basically built the pension fund with billions of dollars and basically used Goldman Sachs to wire transfer the money and to launder the money out of the country of Singapore. Okay, so there could be a hit to the earnings per share. There could be some impairment going forward as basically the lawsuit basically unfolds and the billions of dollars that Goldman's going to have to basically repay the sovereign fund for basically building it or helping the corrupt politicians basically empty the pension fund. So do you think that earnings per share growth rates in 2018 and 19 are going to be negative 5.74? I mean, we're still in the growth phase, unemployment's low, GDP's growing at 2.7, 3.2%. You know, we're getting about 175 to 250,000 jobs created per month. You know, investor confidence and consumer confidence and retail sales are still relatively strong. So do you think that the growth rate earnings per share in 2018 and 19 are gonna be negative? Okay, let me try that again. Do you think they're gonna be negative? Do you think they're gonna go up 44%?
No.
Do you think they're gonna go up 51.2%?
No.
No. Do you think they're gonna go up 26.1%?
Maybe.
Maybe. Do you think they're gonna go up 78%? Do you think they're gonna go up 25.8? Go down 82%, go down negative 146, go up 1,200, and go down 40, go down 67, go up 211, go up 12, probably, go up 7, probably, go down 30%, go up 33%, go down 44%. So that's why I don't like to use estimates. I like to come up with my own number. So what was the top end of the percentage? Now what we can do is we basically go back and we can do a median, right from high to low, and figure out a midpoint and a optimistic and a pessimistic scenario, and then pick a number and then go out into the future, okay, very quickly. So what was the top percentage? Yeah, like what, 25%? And then what was the other? No, there was like 12% and 7%. So do those seem realistic to go forward? Yeah, they're a reasonable range. Were all the other ones reasonable? No. So if you know what it is, then you know what it is. Okay? And your midpoint is basically 12. Okay? Is that optimistic? Yeah. It's probably going to be something in between here. So what's the midpoint between 7 and 12? 10%? 10%. So that kind of gives you an upper bound, a mid-range, and a low range. Okay. So what do you think the growth rate is going to be in earnings per share for 2018 for Goldman Sachs? We're not in a recession. Banks, you know, in really good shape, except for what happened just the other day, which is a non-recurrent event. So what do you think the growth rate should be between 2017 and 2018? I need consensus. Because I don't need to do the analysis because I have 32 analysts that give me basically feedback. And what will happen is the estimates that you give me will be a bell curve distribution, and I can pick the midpoint. And if I have consensus by everybody going forward, then it makes it a little bit easier when we're basically talking to the board and they ask how we came up with the estimates. Consensus estimate, using this type of approach, qualitative survey approach, is totally valid. Our analysts basically, in consensus, made a consensus estimate of Goldman Sachs earnings per share for 2018. So what is it? Okay, I got 10.
I would use 12.
I got 12. So I got 2 out of 32.
10, 12,
10, 12,
10.
10, 10. Anybody else? Anything in the back? Anything from the back, please? 12? 12? 10?
Wait, 10,
10? Okay, it sounds like 10 is the most, so let's do 10. So what's 16.53 times 1.1?
18.18.
18.18. What do you think that the EPS growth rate is going to be in 2019? Is there increase or decreased probability of a recession as we go out? Increased probability. So the growth rate's going to go up or down? Down. And we don't use negatives. Okay. So what do you want to use for 2019? What's the growth rate?
Like 9.
Okay, I got 9. Anybody else?
5.
9, 5, 7, 9, 8, 5,
It's 9.
7, 6, 7, 8, 7, 7, sounds like 7. So what's 18.18 times 1.07?
19.45.
19.45, got it. when did I say that there was a high probability of recession?
2021.
Yeah, 21 to 23, there's been a 90% probability of a recession in the first 5 years of every single decade. Okay. So what are we gonna use for the growth rate for 2020?
We don't use negative.
You don't use negatives.
2%.
Why would you go down so quickly? Do companies smooth out their earnings growth rates? Do companies manipulate their earnings per share?
Yeah.
Yes, they do. So are they gonna take a quick hit, or are they gonna slow the growth rate down? Slow the growth rate down. So what do we wanna use?
5.
You wanna use 5%? Okay, so it's 19.45 times 1.05.
20.43.
Okay, what are we gonna use for 2021?
4.
I hear 2 4s, 3 4s. Why don't we do 4.3 like that? So what's 20.43 times 1.04?
21.2.
Got it. And what's 21.25 times 1.03?
21.88.
21.88. Okay, what are we gonna use for 2023?
1%.
What is 21.88 times 1.01?
22.1.
Got it. And don't we have to go out one more year? So do you want to grow it out another 1% or just carry it over?
Do another one.
1.01. So what's 0.1 times 1.01? What is it? 22.33. Great. So do we have the 2019 number that we could use to do the valuation work? The first 3 valuation methods? Yeah. Because we're going to use 2019. Right? Because 2018 is over, so everybody's looking into 2019 to do the valuation work. Okay, can we move the camera over? Thank you. All right, so what were our discount rates that we're going to use? What are the discount rates that we're going to use? What is it?
10, 9, 8.
10, 9, 8. Got it. And what was the EPS for 2019? What's the earnings per share projections for 2019? What is it? What did we come up with? What is it? Come on, you guys.
19.45.
Okay, 19.45. All right. Okay. So what's 19.45 divided by 0.08? Can you break out your calculators and do the calculations?
243.
What is it?
243.13.
What is it? 2.13. And as of this morning, the current stock price was 203.66, and the market closes in basically 22 minutes. So where's Goldman Sachs currently trading right now on a per share basis? You gotta go find the data. What is it?
204.65.
You're gonna have to break out of the habit of having the professor feed you all the information. You're gonna have to go get the data. You gotta break that habit of relying on everybody to give you the data and the information. Okay? You gotta find the information and you gotta calculate it. All right. And I was also told that Goldman Sachs about a year ago was trading at about 240 and got as high as 270. So I have kind of a technical range that I can check the valuations against to see if we're completely off. Can somebody double check that for me?
Just dropped down.
Yeah, but these are historicals.
Oh.
It averaged around 240 last year and it got as high as 270 within the last 3 years. So that kind of gives us an idea of what the potential intrinsic values could be right off the bat. So are we close?
Yes.
Yeah, we're within a relative range, right? Based on midpoint for stock price projections. Got it. What's that 1945 divided by 0.09?
216.11.
Thank you. 216.11, thank you. And what's 19.45 divided by 0.1? That's pretty easy, right? 194.50, got it. perpetuity done. Okay, perpetuity done. And usually what we do is we take the midpoint. Got it. Now what we're gonna do is we're gonna do the Gordon growth model, okay? And basically this is a valuation grid that I put together. Here are your growth rates, 1, 2, 3%. Growth rates in the EPS. Do you think that $1 trillion bank can grow its EPS growth rates at 2 to 3% forever? No. The bigger the firm, the slower the EPS growth rate. So the last class basically recommended that we use 1. Okay. And then what were the discount rates again? Discount ranges, we want to go from low to high.
8, 9, and 10.
Okay, so 8%, 9%, and 10%. Okay. So what is 8 minus 1? 0.07. What's 0.07? What's 1945 divided by 0.07? What is it?
I haven't done the actual number, I said it's roughly 270, I think it's.
277.
277.8, something like that. But here's the key, okay? Please take note. Here's the key. If you have one of these, if it goes 1, 2, 3, 8, 9, 10, once you've solved one, you can solve the diagonal because it's exactly the same. Okay, 277.8, 277.8. This actually saves you a lot of time. So what's 9 minus 1? 8. Didn't we already calculate that over here? 243.13.
You can do it by 2% too.
Point, you got it right there, 243.13. What's 10 minus 1?
9.
9.
16.
216.11. Got it. What about this one? 8 minus 2 is what? 6. What's 1945 divided by 0.06?
324.17.
3 what?
324.2.
0.2. Got it. I know that one. 324.20. Excellent. And then the last one was 8 minus 3. 5. What's 19.45 divided by 0.05? What is it? Which one do you want to use? Which one do you want to use?
Bless you.
What valuation methodology? Which one here? What sensitivity do you want to use? 1, 2, 3 growth rates, 8, 9, 10 discount rates. What do you want to use? They're going to be asking you this stuff. I swear to God. They're going to ask you, what do you think? What do you think? What do you think? What should I do? What should we do? That's why
9
you're
and
here.
1.
What?
9 and 1.
9 and 1? So 243.13, got it, okay. Can I calculate multiples from expected returns? Yes. So what, 1 minus what? 0.08 is what? 1 divided by 0.08?
0.92.
No. 1 divided by 0.08 is what? Give me the multiple. 12.5. What is 1 divided by 0.09?
11.11.
11.11. What is 1 divided by 0.1? 10. Can I calculate, can I impute multiples from the expected returns? Yes or no? Can I impute multiples from the discount rates? Yes or no? Yes, I can, because I just did it, okay? Using the perpetuity model. Can I do it using Gordon growth? Yep. Okay, so let's run the scenario. So what is 1 divided by 0.07? What is it? 14.28. What's 1 divided by 0.09? 11.11. Oh, it goes in the same one, right? 0.00. So here this gives you a range. Do you think the Goldman Sachs earnings per share is going to grow at a constant rate forever or remain flat? $1 trillion bank that's been around 140 something years, do you think they're going to be able to grow their earnings per share at a constant rate forever or not? They've been around over 140 years. Do you think they'll be around another 140 years?
Yes.
Yeah, absolutely. Do you think they can grow their earnings per share at a constant rate forever? No? No?
For the next 140 years, maybe.
Well, over the next 20 years,
Yeah.
30 years. It's a monopoly. They control a significant portion of the banking system. They have a monopoly position. If you have a monopoly position in the marketplace, can you grow your earnings at a constant rate forever?
Yeah.
Yes, you can. So what model are we going to use, the perpetuity or the Gordon growth? We're going to use the Gordon growth. That's correct. So we're going to use these multiples. Okay. Oh, darn. I actually left the multiples up from last class because, oh no, we already put those up. Perfect. So let's calculate some other imputed multiples. Do you know what the price of the share was in 2018? Can you give me the price in 2018? And do we have the 2018 earnings per share calculated? Did we calculate the earnings per share for 2018? Yes? No? Yes? No? Either yes or no?
No.
We did it? What did we do over here?
Yes.
Okay. So what's the earnings per share for 2018?
18.18.
What is it?
18.18.
What was the average share price in 2018? Well, didn't you already say that in the last class it was 214? Are you guys doing the research or are you just hanging out? I need this data quickly. So what was the average share price for Goldman Sachs in 2018? Please, please, can you give me the data? What was it?
230.
230? So what's 230 divided by 18.18? Can I calculate a PE multiple from this? Can I calculate a PE multiple from the average share price in 2018 divided by the estimated 2018 EPS? Got it. So what was it? 12.7. Got it. And then what about 2019? Where do you think Goldman Sachs stock price is going to be next year? Where do you think it's going to be? Same, lower, a little bit higher, probably a little higher. What do you think?
210.
210?
Maybe 215.
215? Got it. And then what's our estimated 2019 EPS?
19.45.
19.45. What's 215 divided by 19.4? Got it. All right. All right. So we've got some 14 times, 11 times, 10 times, 13 times, 11 times. We got 14 times. We got 13 times. We got 11 times, and we got 10 times. Got it. Okay. Just from that analysis, we manufactured some multiples. Okay. Now let's look over here. Where do you think Goldman Sachs' multiple is going to go in 2019? Up, down, same? You tell me. Think it's going to go up? You just projected that it was going to go down to 11, so that's inconsistent. So do you think it's going to go down, or is it going to go up, or is it going to stay the same? Down by how much? To what?
12.5.
What?
12.5.
12.5?
Yeah,
13? Okay. Where do you think JP Morgan's going to go? Is it going up or down? What's the probability it's going to go up? Lower. So where's it going to go? To what?
12.7.
What about Bank of America?
Down.
To what?
11.5.
What?
11.5.
And what about Wells Fargo?
11 even.
And what about Citi? Yeah, Citi's a basket case. Okay. So here, so the point, right? We got 17, we got 16 times, we got, 15 times, we got 13 times, we got 12 times, 11 times. Right, we have a midpoint here. That's pretty high, isn't it? 15 times? Yeah, that's pretty high. It's probably gonna be down in here. Right, probably in this range. So we got 12. We got 12. We got 13. And we got 11. 11, 12, 13. Get it? Basically, we got 13, we got 12, we got 11. What was our earnings per share projections for 2019? What is it? 19.5. Thank you. So what's 19.45 times 13? 252.85. Thank you. And what is 1945 times 12?
233.4.
And what is 19.45 times 11?
213.95.
Okay. This is the midpoint. Okay. You get it? So everything you've learned throughout the whole semester in an application. Okay. Is it going to be important to be able to value stocks? Are you going to be investing in stocks?
Yes.
It's important to understand how to value stocks so you can make investment decisions and not make any mistakes. A little bit. Okay. All right. So could you add up the total assets for me? I'm going to jump. I'm going to wait to do the discounted cash flow methodology in a second, but I want to jump ahead a little bit, and then I'll go back to the DCF over there. And maybe we'll have to do it on Thursday. But I'm going to jump to the peer group financial ratio calculations. What happens a lot of times is students get very frustrated, and what they do is they just take an average of the financial ratios as opposed to taking the weighted average of the financial ratios. Okay. And in this case, I use the total assets as the factor model, okay, as the weighting scheme to calculate the weights. Okay. And the JP Morgan is roughly 2.5 trillion, B of A 2.2, Wells Fargo 1.8, Citi 1.8, and Goldman Sachs is around 0.9 something trillion. So if you add that up, what do we get?
9,447.
9 what?
447,056.
And these are in what, billions or millions?
Good.
Okay. So let's just make the math a little bit easier and use 9.5 trillion. Okay. So 9.5 trillion. So what is 2.5 trillion divided by 9.5 trillion? When you do the calculations. This is a marathon. 26%, got it. What's 2.3 trillion divided by 9.5?
24.
And what is 1.9 trillion divided by 9.5?
19.
And what is 1.8 trillion divided by 9.5? What is it? 19. And what's the plug for Goldman? What's the plug number? Base it out of 200. What is it?
12.
12? Got it. All right. So now you got the weights. Okay. Now what you do is you take, Sarah was nice enough to already give us the ROE. So what's 0.26 times 9.59? What is it?
2.5.
Okay, got it. And what is 6.83 times 0.24?
1.64.
1.64. And what's 13.36 times 0.19.
2.54.
2.54, and what is negative 3.19 times 0.19?
Negative 0.61.
Thank you. And what is 5.07 times 0.12?
0.12.
Yeah.
0.61 also.
Is that right? 5.07 times 0.12?
Yeah.
Yeah, and you got what's 0?
0.6.
0.6?
0.61.
Got it. Okay. And can you add those up for me?
Six point six eight.
6.68. So basically your peer group, ROE is 6.68. That's what you're going to use in the peer group row, okay, within your analysis. Let's do ROA. So it's 0.26 times 0.97. 0.25. What is 0.82 times 0.24?
Yeah, 196.
Here or here?
That,
This one?
yep.
196. 0.2.
Got it. And then what is 1.8 times 0.19?
0.35.
And what is 0.19 times negative 0.37?
Negative 0.07.
And what is 0.12 times 0.48?
0.05.
And then can you add those up to get the weighted average peer group return on assets? 0.78.
0.776. Yeah.
So that's how you calculate the peer group ratios. Okay. Don't just take the average, you need to do the weighted average. Okay. And if you set this up in Excel, that's all you got to do is just copy and paste it, replace the financial ratios, boom, it'll calculate it for you. I say what we do is we do the DCF piece on Thursday, along with the 3 weighting scenarios, with the recommendation and then the trades. And we're done. So you basically have the majority of the valuation work done for you. If you want to change it around, or you believe my assumptions were unreasonable in some fashion, you can do it. You can change it if you want to. I don't care. Make sure you update the deck. I'll take the decks back. You can take pictures of the decks. And then next Tuesday, you should send me a draft of your deck so I can take a look at it and I'll give you some comments. Use the day as a lab day to work on your homework and work on your projects, get the deliverable together, and get ready to come back the following Tuesday. So I come back the following Tuesday. We'll do another lab. We'll probably pound out the homeworks during that Tuesday. And then you guys, everybody will go on Thursday, professional dress, we'll do your presentations. And then make sure you bring a draft of your PowerPoint presentation, one per slide, stapled, black and white, so I can do some edits with you. And then you have until the following Tuesday, which is your final, to basically get everything pulled together to come in for the final day. Okay, I will give you up until 12 o'clock on the Thursday of the final week. If you're still struggling and you have outstanding materials, you still call me. I'll give it up until that 12 o'clock time period. And then if you want, you can come to the Metro, where we're going to be eating beer and drinking burger, which you're invited to come, because I always throw a semester-end party for my students. I will give you up until 3 o'clock that day to give your last deliverable, and then I'm out. Okay. And then I do have a presentation. I'm doing an economic presentation to a group of accountants and real estate professionals. If you want to come, you can be my guest that night, and I can give you the directions and stuff like that. Great networking opportunity to hang out with some finance and real estate people. Like me to go over your deliverables and go over the deliverables. Make sure you pick up the final, pick up the extra credit problem set. Make sure